This report brought to you by the Richmond Club, where investors and high-growth companies meet.
Good afternoon, ladies and gentlemen. Our first speaker, Mark Appleby, who is the CEO of Tartisan Nickel, is not able to make it today, so he asked the Director of Research for Beckett Wealth Management, who wrote the Tartisan Research Report that you have in front of you there, to take his place. Ladies and gentlemen, please welcome Mr. Jim Steele.
Oh, you're too kind. I know that you don't have the Beckett Wealth Management Research Report in front of you because it's on the pile on the table and you can pick one up later on if you're interested. So I'm going to talk about Tartisan Nickel Corporation and the focus really on the stable nickel resources rather than the electric vehicle revolution, because let's face it, you need to have nickel in the batteries before you can feed the electric vehicle revolution rather than just nickel in the ground. The disclaimer, it's the same as they all are. This is the capital structure of the company. There are 109 million shares outstanding. The warrants are priced at 15 cents. The options are priced at 7 cents. Neither of them are in the money from a little capital market problem right now with shareholders dumping shares on the market, which accounts for the share price right now, and the company hopes that it is temporary. However, that makes the market cap a scant $5.85 million for what they have in the asset portfolio. And as you'll see shortly, the actual enterprise value of the company is just over $1 million. There are four principal property assets. The Kenbridge Nickel Copper Deposit in Kenora is an advanced exploration project that has a lot of things going for it. It's got a preliminary economic assessment, and the company is working on structuring the next 43-101, which will have elements leading to a pre-feasibility study once they get quite a bit more work done. The Alexo-Kelex deposit is a project near Timmins, where the last company, Canadian Arrow, took out a bulk sample of 40,000 tons in 2004 and processed it at the in Timmins. We are in the process of carrying out the reclamation the company is in the closure plan, and a small amount remains to be done, at which point the company will get the bond back from the Ontario government, which is about $283,000, or that is the plan. The Don Pancho project in Pasco, Peru is the same as the Trevali's Santander mine, with zinc and manganese in the same structural belt, in the same rocks. And right now the company is looking at doing a Category 1 environmental permit for it. So there's really not much to talk about. And Ichuña is also a copper gold project in the same rocks as Buenaventura's San Gabriel deposit in the south. And the company is also doing a Category 1 environmental permit to allow mechanized exploration, since without it, all you can do is send geologists to the property to run around. The key underlying asset of the company is the Eloro Resources shareholding. Now, I'm the senior corporate advisor for Eloro Resources, and been working on their La Victoria project in Peru since 2015, when the predecessor company to Tartisan Nickel, Tartisan Resources, was on the operating committee. So I have known of Tartisan Resources and Tartisan Nickel for quite some time. But the great benefit of the La Victoria property is that it is a low sulfidation gold deposit that is being drilled now. And Eloro Resources is run by Tom Larson, who I imagine that a number of you know, who, in my opinion, is a very savvy capital markets guy, which is why the stock is at 60 cents and why the asset within the balance sheet of Tartisan Nickel is at $4.5 million, which not every exploration company can say. We're going to focus on the Kenbridge nickel deposit, which is the core assets in the Tartisan nickel portfolio and was acquired when Tartisan bought Canadian Arrow Mining, which was the holder of it from 2007 to 2017. Canadian Arrow is composed of a whole bunch of engineers trained by Noranda, and they were pushing Kenbridge toward a production solution that we can see within the preliminary economic assessment, and the fact that they got a lot of the work necessary for development done, and they started the environmental baseline studies. I think Canadian Arrow probably would have had it in production if the bottom hadn't fallen out of the market in 2010. What is really interesting about this deposit is that it is defined by drilling down to 682 meters, and that was done when Falconbridge was exploring it and putting the shaft down, so it has shaft access to 682 meters, and there are exploration levels just cut in, just enough space cut into the deposit for a drill station, where they put in 3 holes at 150 foot centers of this way, this way, this way. Yes, the deposit is still there, so they kept the shaft going down to where they eventually stopped. You can see that in terms of their actual resource, that the red is greater than 0.6%, and the other colors are less than 0.6%. We in terms of the company, are looking at it more on where is the really economic part of the deposit, and we will get to that in a sec. So this is the resource. The first resource is in the PEA, and it is 98 million pounds of nickel and 50 million pounds of copper at a 0.3% cutoff. The 2 other resources were internal management resources from Canadian Arrow that they were simply putting in the new nickel price and seeing what the numbers came out. And that's why in 2018, Tartisan's starting price of $6.38 per pound nickel and $2.80 per pound copper is going to have a predictive effect on the 2008 43101 compliant number, in which case the nickel was $10 a pound. Now, in terms of planning, the issue we have was in 2014, the CIM put out new best practices guidelines that said that you can't call a measured resource without having the potential for eventual economic extraction. And now that means the measured resource is close to an actual reserve because it has a financial solution. And we can't call it a measured resource just because it has 3 drill holes going through a block that's 5 meters on a side with 12 data points, so we know exactly how much mineralization is within that block. Now it has to have a financial solution. And that's why the company does not have a resource yet, because rather than take all of the information from the 2008 PEA, the company wants to look at what the actual production parameters would be and try to develop some more rational, realistic numbers to assign a value to what would be a measured resource. And the company has mind map of Perth, Australia, doing the resource calculation. This is what the company has so far in terms of defining it from the mountain of data acquired from Canadian Arrow on the acquisition of Canadian Arrow. We can see that within this one, the block, the light blue is 0.7 to 1%. The red is 1 to 2%. The yellow is 2 to 3%. There is a light blue or dark blue, which is 3 to 4%. And then down at the bottom, you can see some other colors. There's a purple and a pink, which are the higher grades of greater than 5%. The database within the resource in 2008, the highest value was 6.7%. in exploration, at the bottom, the highest value is 11% nickel within the work that Falconbridge did. And this is copper, and you can see within the text just what the other elements are that within a massive sulfide deposits, what the expected grades are, and what the database says. Basically, the blue in copper is less than 1%, and the red is greater than 1%. And the highest value of copper within the database is about 12%. But we don't see that very much. That's close to the top. And that's actually with a yellow dot right near the top. The great benefit of acquiring a company in which the mining engineers rule the roost is that they have done a lot of the work necessary that is common to the development of any kind of deposit, rather than being specific to the economic strictures of 2008 when they were doing the work. So that means the metallurgical testing, the grinding circuit testing, the mini pilot plant, and the geotechnical work is consistent with what we have, and we can use it directly, or the company can use it directly to actually advance the project. The geometallurgy has been done, which is excellent, and the liberation analysis, and I've seen that report, and it is possible to get the nickel out of the rock in a fairly straightforward manner. This is the Alexo-Kelex mine. You can see on the left, this is what it looked like when it was in production, and on the right, what it looks like now. There are no fish in the lake yet, but there is a very active colony of beavers damming up everything in sight. You can see these rocks as a reference, which were there to stop people from falling into the pit, are these rocks, which are now there to stop people from falling into the lake. The company has another week of work to do to level some of the existing piles and get rid of some equipment that was left over from there, and then hopefully the ministry will sign off and release the environmental bond. And then the company is going to set up the Alexo-Kelex site as a regional exploration to look at other properties in the area for a Cambalda-style nickel deposit, which is discrete bodies of 1 million tons, 2 million tons, 3 million tons within of higher grade nickel within an ultramafic stratigraphy. And we can see that there are two such bodies at Kelex, which are the two pits that you can see covered in ice, and then also at Alexo, which is just out of the picture to the north. But there is so much information with respect to the drilling that was done, is that the company can categorize the deposit idea and then look to test the actual discovery potential of everything in the area using surface geochemistry and surface geophysics, which is going to happen toward the end of the month, and with some testing of the methods of discovering these when you know exactly where it is and how deep it is. So that might generate some interesting results in the future. And this is what we're doing, what the company is doing for Kenbridge. The mag survey over the Kenbridge deposit is designed to see with advanced technology right down to 700 meters, just to make sure that it's there and see if the company can tag a particular response to a particular percentage of sulfides, and then the idea would be to run it over the rest of the property, because within the geophysical map that you can see and the two targets, Kenbridge on the south and the Falconbridge copper nickel target on the north, that has been known since the 50s but has never really been followed up except by proving it is there as part of a structure by geophysics, then the company will look at doing the mag survey over the entire property and an IP survey over specific grids of where the previous information shows that there is something of interest. And then at the same time, the analysis will go on with respect to the longitudinal of the Kenbridge deposit to figure out where the drill should go in order to fill in gaps within the database and increase the resources or increase the confidence of existing resources. And that's the company.
This report brought to you by the Richmond Club, where investors and high-growth companies meet.